Trade stocks with less risk by using the same simple tools, trend rules, and position sizing that TradeFinder uses to help control losses. Do you need a bit more income each month? Have you thought about trading stocks but have backed off because you fear losing money? You are not alone. A great many folks are in the same boat. Is it possible to trade stocks with less risk of loss? And what if it didn't require much money? As anyone will tell you, trading in the market comes with risk. Using professional traders' tools helps you trade stocks with improved protection against losses, not without risk, but with controlled risk. Let me tell you about an easy-to-use trading software system called TradeFinder. TradeFinder will run on Windows, Mac, or Linux. It was developed by traders to take advantage of the online stock brokerages available today. It is based on the rules of the modern trading system, which provides a set of principles found to be essential by most successful traders today. Our risk control tools are based on common sense and probability theory. If you trade with just 2 trades, your chances of success are statistically low, about 1 in 2. But if you trade with 5 trades at a time, your risk of success is greater. You have 5 chances of success. Let's say you have an account with $1,000 in it and wish to have it invested at all times. You could make 2 $500 trades, but your risk of loss is high. However, if you trade $1,000 across 5 $200 trades, your risk is reduced, and probability suggests more opportunities for success. A core principle of successful trading is to follow the stock's recent trend. If the price has been rising, you may want to favor long trades, expecting the price to continue rising. TradeFinder can also place short trades when you expect the price to fall, and trading with the trend reduces risk. New traders sometimes find shorting confusing because you sell shares you don't own yet, but your broker can lend you the shares to sell at the start of the trade. If you want to trade short, you need an account balance of at least $2,000 per FINRA Reg T. Good sources for learning more are Investopedia.com and Finance.yahoo.com. TradeFinder makes it easy to choose stocks to trade with the trend. Our artificial intelligence analyzes thousands of stocks continuously and lists them as trade ideas with the direction noted. You do not need to do extensive analysis to determine trending. It is very important to determine how much money you want to trade on a particular stock. When you create an account in TradeFinder, you can choose a default trade amount as a dollar amount or a percentage of your account. The modern trading system suggests choosing a percentage between 2% and 5%. If your account is small, less than $5,000, then it tends to be at a higher percentage. Size the trade so you buy at least 5 shares, as this gives you the opportunity to achieve higher results. TradeFinder displays your default amount, but you can always adjust it up or down as you form a trade. Another important element of risk reduction is the choice of stock you trade. Among the more traditional assets to consider are exchange-traded funds, called ETFs. Because they are made up of many stocks, there is an averaging effect, and ETFs tend to be much less volatile than a single stock. There are ETFs for most of the 11 stock sectors in the market. Some stock sets are more volatile than others. Volatile stocks can present opportunities for quick profit, but they can also move against you rapidly. In general, the stocks of larger companies are less volatile. To find which stocks are volatile, look for the stock's VIX value. The higher the VIX value, the more volatile it is. You can find these values by researching Finance.yahoo.com or another website. One of the most important goals for good trading is to avoid losses, and controlling risk is the key.